Well, Telstra CEO Andy Penn wants the government to rethink its position on the NBN and its pricing. Or he warns that the major telcos will not make enough return on capital and customers will lose out.
Despite margin pressure, investors are taking a new look at Telstra as our super low interest rates push savers out of deposits. I asked Andy Penn first what he made of his share price, still way off the highs of nearly $6.70 in 2015, but this year shares are up 39%.
One of the most significant dynamics affecting Telstra is the rollout of the NBN. And of course, as you're aware, and I've sort of shared with the market, that really means that about a third to a half of our profit disappears to the NBN over the period of the rollout, and that happens progressively. And we're now about more than just over halfway through that rollout. And so that's had a significant impact on the overall company economics and therefore understandably...
Including cuts in dividends.
Yeah, well, understandably would obviously impact the overall share price and dividends and those sorts of things. What I would say in the last year, since we announced our strategy, which we call T22, that's going very well. We're well progressed in relation to 5G.
You're running ahead of your T22 plan. I think you're 12 months into the 3-year cost-cutting plan. Now, in late May, you brought forward reconstruction announcements. That was a $500 million impairment on your legacy assets and a rise in restructuring costs from $600 to $800 million. Now, just to be clear, Andy, that is not an overall increase in costs we're talking about. This is just about timing?
Yeah, this is about saying we think we can bring some things forward that we were otherwise contemplating. That's going to put us in a much stronger position to deliver on what we've previously committed.
So your big cost-cutting program has now been front-ended in the first 12 months. I guess the obvious question is, will you accelerate it? Will you actually go further now?
Well, we're obviously coming up to results in August, so I don't want to preempt anything that I'm going to say there. But as I previously said, you know, this gives us further confidence we will deliver against our cost-out program rather than necessarily change our cost-out program.
Those that are critical of Telstra are really focusing on your strategy and wondering if it is anything more than just a giant cost-cutting exercise. Where is the growth going to come from?
This isn't about cost cutting. In fact, the more material part of our program is about investing in the capabilities for the future. So one thing we've done is we've radically simplified all of our products. We've got rid of things like lock-in contracts, excess data charges, all sorts of other charges to simplify the experience for our customers. We've reduced from 1,800 to 20 products. We've launched a new loyalty program. We've launched new enterprise products.
Let's talk 5G and your blue sky. Why should investors believe that you're going to be able to take your first mover advantage and some of the other developments recently, like the political situation with Huawei, the ACCC's decision blocking the Vodafone TPG merger, and convert that to delivering Telstra the edge? 5G
is the first telecommunication network that is specifically designed for the world of the Internet of Things, so connecting things that are not telephones. And that's where we see incredible opportunities within the enterprise segment, because as big industry companies, you know, such as in mining and resources and manufacturing, as they look to automate their businesses, we're looking at a world where we're going to see sensors in everything and everything being connected, and that creates incredible opportunity for growth. Things like applications and services, IoT applications which support automation in mining as an example. If you want to have a remote mine and you want that to be as autonomous as possible, then you need to connect all of the aspects of the mine, whether it's diggers or conveyors or trucks, and that all happens over a telecommunications network. Logistics is another area where we're connecting all of Linfox's trucks around the country, that's providing information to them to help improve the operational efficiency of that. We've got major contracts. We probably connect somewhere in the order of 70 to 80% of cars that are connected.
So coming back to the NBN, Telstra and indeed a lot of other telcos are getting squeezed by the NBN. You've been quite vocal about this, calling for a reduction in NBN's wholesale pricing. You're going to keep this up. Now you've got a new communications minister in Paul Fletcher.
We need a regulatory and a policy framework for telecommunications that is technology agnostic. In other words, we don't want to create a bias for operators to bias one technology over another. We want to give the customer the best technology. Now, unfortunately, because of where wholesale broadband prices have gone, it means it's basically all operators are losing money reselling the NBN, and of course, therefore, some, and they're actively, they've said as much publicly, are looking at 5G to bypass the NBN. And I think that's not necessarily a good thing when it doesn't deliver the right technology for the customer. So unless we get the pricing structure right, we're going to create this unnatural dynamic in the market which biases technology for reasons other than what's the best technology for the customer.
But if I could just push you there a little bit, Paul Fletcher seems to have poured cold water on the idea that there'll be any changes to NBN's wholesale pricing. What you're saying is that if there is no change from the government, that there will be a greater move by players to do more outside of the NBN.
Yeah, well, obviously it's not for me to speak on behalf of the Minister, but my point is only just to feed into the debate that we've got to try and create a policy and a regulatory framework that is technology agnostic and doesn't influence one technology over another. And I am saying that I think if wholesale pricing structures don't change, that's what's going to happen. Unless the whole ecosystem is viable, then no one part of it can be viable either. And so, candidly, my point is that unless the pricing structure is changed and operators can actually make a return on capital which shareholders are prepared to invest in, then NBN is worthless anyway.
You've had that quite major outage recently. Now, Telstra, as I understand it, has blamed it on a surge of traffic. This affected EFTPOS, and certainly the retail lobby group was talking about small businesses being affected to the tune of millions of dollars.
Well, the first thing I would respond by is always apologising to our customers for the impact that any network interruption has on them. The thing today is virtually everything that can be connected is connected, and so therefore if there's any interruption in any network, in anywhere, even for the slightest second, it obviously has an impact. And the reality is, unfortunately, things do happen.
Are we likely to get this sort of problem again? Because, I mean, it's impacting the payment system, which is pretty serious.
Yeah, no, absolutely. And of course, after every single incident, we do a post-incident review and try and see what we can learn from that to improve resiliency going forward. Surge in traffic can occur when one limb of a network is cut, and then of course you redirect traffic in through redundancy, and of course that does create overflows of traffic and stuff. But look, from a customer's point of view, they don't care about all that stuff. What they care about is that there is a minimal impact on them, and to the extent there is an impact, we can recover as quickly as possible, and that's our focus.
Getting back to your investors, and I appreciate we are bumping up against the blackout period, do you think the competitive landscape is getting any easier for Telstra now?
Oh, look, it's a very competitive and dynamic market. I mean, we all think of the big operators, but the ARPUs, which is our sort of average pricing, has been coming down in the industry by 2 to 3% consistently over the last 3 to 4 years. You've had more people coming in to the market. So competition is alive and well. The thing that I would say, though, that we've got to pay close attention to is that whilst on the one hand lower prices is good for customers, we mustn't forget that telecommunication requires an incredible amount of capital investment. So again, if we go back to the regulatory and policy framework, it's got to be a framework which is pro-investment. That when we're looking at these things, it's important not only to take into account price from a consumer perspective, but it's also network quality, because if return on invested capital is not sufficient, and indeed return on invested capital is now around 7% across the industry, which is lower than the weighted cost of capital of all of the operators.
And you're still committed to having it at 10%?
And our aim is to get it to 10%, but the reality is we can't provide an attractive return for investors if we can do that.
Some analysts are now looking more favourably at Telstra, and one of the reasons is that there's a belief that this could be the bottom of the cycle for dividends. Would that be fair?
Well, I won't comment, as you rightly pointed out. We're rapidly coming into results, and I've got to be careful that I don't preempt any of the things that we need to report at that time. But what I would say, suffice to say, is that I've been very pleased with the last 12 months since we announced T22. We're on a good track in terms of many of the initiatives that we're putting in place. We're leading the market on 5G. We're not only leading locally, we're leading globally. We've moved ahead on our productivity program, as you say. We've brought some things forward. and I'm very excited about the future. Notwithstanding, we still have probably another 2 to 3 years of economic headwinds to work through as the NBN continues to roll out.